So first things first, what the hell is crypto and where did it start?
So a lot of people ask us this kind of question as to kind of where the hell did it all come from, what's it all about? And fundamentally, a lot of people now publicly are very transfixed on Bitcoin. That's the big one everyone's heard of, everyone talks about. But where we are today, you know, Bitcoin's now existed for over 10 years. So loads of things have happened and there's so many misconceptions along the way. So probably the best way to answer that is probably to go back to where it all started. So probably around 2008, which was the big financial crash.
Okay.
So back then, obviously, the basic premise is that the banks had cocked up and publicly people had realized for the first time that they're doing things maybe they shouldn't be doing. And obviously we had the big recession. So as it goes, the story of Bitcoin, although some people may disagree, is that a group of people, a group of computer programmers got together under the pseudonym of Satoshi Nakamoto. And they basically came up with this concept, which was quite simple, which is, why do we need a bank or a third party in order for two different people to pay each other? So if I was to buy something from you, or as you bought your equipment off me, why do we need to trust Santander or NatWest to swap that money between us? Why is there not a way in which we can just do that ourselves?
Yeah.
So that was kind of where it all came around, and Bitcoin was ultimately designed to create a mechanism where I can pay you directly and there's no need for a third party, be it a bank, a government, an organization, to effectively swap that between us. It's a direct thing and it cuts that third person out. That's the whole premise of what this technology then became.
So it's basically cash. A digital version of cash.
Kind of, yeah. That was its first in conception. It was exactly that, a digital cash. So the same way I could give you cash now and no one else needs to get involved, this was an online version of that same process. Because up until then, and still the majority today, it requires a bank, a government, an investment house, a third party to do that transaction. So this is where blockchain technology was then created to kind of be the cool underlying technology behind all this stuff.
So what is blockchain technology then?
So blockchain technology really it's much more simple than people want to care for. It's simply just blocks of information, critically information and not money. That's an interesting point to define that we'll explain. It's blocks of information that are all linked together with effectively a digital chain. So lots of blocks of information and they all nudge together. If you break it down in its absolute rawest, most simple form, blockchain is a new type of technology which we've digitized human trust.
Yeah.
We've fundamentally kind of gone, people suck. You know, you can lie, I can lie, everything can, you know, the banks can do this and everyone can do that. What if there was a way in which we could remove human error from a transactional process?
Yeah.
So Bitcoin was the first example because that was money. So the way the blockchain works for Bitcoin is, instead of there being a bank that swaps the money between us, the blockchain, it kind of operates a little bit like a big Excel sheet or a big spreadsheet that everyone can see.
Yeah.
But once a record has been put on there, it can never be changed.
Okay.
So you can never say that money didn't go here, that money didn't go there. So if I sent you one Bitcoin, the whole Bitcoin blockchain would publicly declare that this address sent this much coin to that address and it's stamped forever. So one of the conceptions of Bitcoin, misconceptions rather, is that it's this anonymous, crazy currency and you can just make money disappear. The reality of it is it's one of the most traceable data records we've ever had. Therefore, removing the banks, removing the governments, but a physical process has taken place to mean that that is a transfer of information stamped forever.
So take money out of it then and say Bitcoin. Could blockchain technology be used for other things like updated medical records or insurance claims?
This is exactly where it starts to get really exciting, yeah. So the best way to kind of think about it is a little bit like, you know, the internet. So if you imagine the internet as the cool underlying technology, and on top of that we've got eBay, Amazon, Microsoft, Facebook.
Yeah.
We wouldn't say that Facebook is the internet. I mean, it might be for a lot of people, but you know, we know it's just using that technology. The same way for the blockchain, that's the cool underlying technology. And on top of that same tech, we have Bitcoin as a payment mechanism, and things like Ravencoin, Zcash, Zencash, Tron. You know, all different businesses performing different business cases, chain, you know, medical information. And that's fundamentally the difference. There's so much more to it than people realize.
Most people will have heard of Bitcoin,
yeah,
I imagine, because obviously it was huge. It's in the news last sort of 2, 3, 4 years. But what are altcoins? Because I've heard them called shitcoins. Is that what you'd call Ravencoin and those types of coins, would they be?
Yeah, well, it wouldn't be as rude as to say Ravencoin is a shit coin, but yeah, by definition, yeah, you're correct. So an altcoin is exactly that, an alternative coin. So technically speaking, an altcoin is any coin that is not Bitcoin.
All right.
So Bitcoin was the first cryptocurrency. Yeah. All the rest of them have inherited the name cryptocurrencies just because Bitcoin was a currency, even though they should really be called crypto tokens. But yeah, commonly they're known as alternative coins, altcoins. So that's Ethereum. Well, pretty much any coin you've ever heard of that's not Bitcoin is an altcoin. Yeah.
So why is it rude to call them shit coins?
So it's not, is the short answer. There are a lot of coins out there that are shit. So this kind of comes around again from this kind of big run in 2017 where there was a big craze called the ICO. So there was something called an ICO, an initial coin offering. So for those listeners that...
I've seen loads of those adverts.
Yeah.
You know, buy coins at like 1 pence, 2 pence.
So effectively, when a company launches on the stock market, it has an IPO, an initial public offering, where people can buy the shares, in theory, a little bit cheaper than when they think the business is going to go. So in the crypto world, because the technology had advanced before regulation, all the guys in the crypto world came up with this cool new thing called an ICO, an initial coin offering, where they basically promised all of this, and you buy our coins at this price, and then they're going to be worth this because the business is going to do this.
With the next Bitcoin getting now.
Bitcoin, Yeah. Now, of all of that, there was just a lot of hype and a lot of BS and a lot of promise. But that didn't stop that period of time raising more money than the venture capital sector combined for that period.
It's exactly the same, isn't it? It's like we've got a new startup.
Exactly that. But people were literally investing in thin air and a lot of times. Now, a lot of people made a hell of a lot of money because some of these coins did go on public exchanges and they did do very well. But the problem was ultimately they were backing technology, which, you know, they were backing promises which weren't yet materialized. We are going to do this, we can do this. And a lot of companies legitimately had very good intentions. One of the best examples of an ICO would have been Ethereum. You know, that was before it was a done thing. That's just how they raised a bit of money. And
that's what I invested in.
You know, Ether. But all this conversation doesn't rotate around Ethereum. That was much earlier. But the ICO craze kind of comes from after, you know, that year in 2017 when the prices started going mad. This is where all these ICOs came from. It was kind of 6 months of crazy. So the reason why people say, oh, the shit coins is because the tiny little coins with smaller values of anything up to 20, 30 million generally. And fundamentally, they promise to do X, Y, Z. And the kind of quick wins, they're basically home runs. So you're either going to make a boatload of cash or you're going to lose it all the next day. And the fundamental reason and the kind of logic behind that is, well, people overpromised stuff, couldn't deliver it. The teams were, you know, sometimes there was even a coin, I can't quite remember its name, but there was a coin that was set up. It had a stupid name. It was something like "Don't invest in me" coin, or like "Pump and dump" coin, or like it was specifically designed to kind of pull on the strings of this stupid mentality, and it raised millions of dollars. Like because even though it was designed for that, they were going to list on a public exchange. So it was just this bizarre thing where people were kind of raising huge amounts of money with zero regulation, and subsequently the majority of shit coins, because they weren't backed in any kind of substance, fell by the wayside in exceptionally high numbers. It was something over 95% of people lost money if they'd have held for a certain period of time. It was really bad. So, you know, you wouldn't put money into a stocks or a share that wasn't by an experienced team that did some dodgy stuff, had a rubbish product. So if you kind of apply the same logic to the cryptos that you're investing in, what's the product? What does it do? Why is it a business problem? What's it fixing? Is the technology good? Does it look like they've got a good marketing team and a good staff team, and where they're based? And you can check all this stuff publicly.
So as an investor, really think about cryptocurrencies and altcoins as you would any other investment into stocks and shares.
Absolutely, yeah.
How would someone go about, or how would a dummy go about buying a Bitcoin?
Well, the beauty of it is now is as the market's developed over many, many years, there's loads and loads of ways of doing this now. You know, there's probably at least 10, 12 different places to do it very easily in the UK. You know, a lot of people, you know, getting your money in is exceptionally easy. Getting your money out is also exceptionally easy. You know, people go, okay, well, if it's real money, where can I spend it? Well, lots of big companies, you know, Whole Foods just accepts full crypto payments. Lamborghini do, some BMW garages. Obviously, my company takes full crypto payments. There's lots and lots of avenues now, but even if a specific company doesn't accept it, there's now third parties where you can get a Bitcoin debit card. So you could top up your Bitcoin onto a card and go and spend it anywhere where there's a Visa application. So you can literally take it and go and buy drinks at the pub.
Yeah.
So getting your money in and out now is really quite a simple process.
That was one of the things that actually attracted me to investing into your product and your business. Was you accept cryptocurrency as payment, so obviously you must believe in it enough to actually
you got to be able to fall on your own sword, right? Like this is the thing. If I'm very aware the prices go up and down a lot, and we're very aware of that, as are our clients. So if we sell something for 10 grand and you pay me £10,000 of coin, I know it might be worth 5 grand the next week.
Yeah.
And if I'm not prepared to do that, then how can I possibly stand here and say, I expect you to do the same thing?
And the other thing was as well, so a lot of the investments, and part of the reason why this whole thing came about, where I was going to invest in different things and sort of like let people see for themselves what investments did well and what investments don't do so well, was very few people that seem to be selling investment opportunities actually owned any of their own asset or believed in enough. But you actually have crypto mining rigs running, don't you?
Yeah, absolutely. Yeah. The big kind of thing that we get, which is, I totally understand the criticism, but the irony of it is they go, oh, well, if these money-making machines are so profitable, why do you sell them?
Yeah.
And I can kind of understand that as a fair point, but equally, I couldn't do what I did if I didn't believe in it. So a lot of the advices that we give our clients is based upon our own understanding. What are we mining this week? What are we doing here? How can we improve what we're doing?
Yeah.
And we just want to help people get on board.
I've got a question, and so if I'm a normal person, why would I choose Bitcoin over normal money?
Now, if you believe in crypto for the future, it's a double-sided question, really. So if you believe in Bitcoin going where it's going to go in the future, and 100,000 plus Bitcoin, which I believe with every fiber of my being, to make that point clear, it would be stupid to spend the Bitcoin now, right? Because you'd effectively have then bought a machine for 10 times more down the line.
Yeah.
But what you have to remember is Bitcoin's been around 10 years now.
Yeah.
So there are a lot of people that 10 grand in cash today was literally 10 quid a few years ago.
Yeah.
So there's a lot of Bitcoin millionaires out there that have put in a couple of hundred quid or a couple of £1,000 that now quite enjoy buying a new car, buying a house, buying a bit of equipment off what to them was a very small amount of money, because it's, just easy for them to do that.
Following that thought process through then, is it too late for people to get those kind of returns and invest in Bitcoin?
Yeah, this is the question we get all the time. Absolutely, critically, categorically not. Like, I really don't mince my words when I say this. I mean, blockchain technology, this technology, it's, like I said, we found a technology that replaces third parties, banks, lawyers, solicitors. There's even people now testing this in really cool ways, like with Amazon, for example. Like at the moment, if you get, you order something of Amazon, usually comes the next day because Amazon's great. But what if it doesn't? You've still paid for that package. You've got to go back and forwards. There's technology now on the blockchain that you're only going to be paying for a parcel when it physically turns up at your house.
Ah, right.
There's AXA, the insurance company, have a product at the moment called Fizzy, which is an automated flight compensation system. So if you go away with your family and you miss your plane by 3 hours or delayed or whatever, you're entitled to compensation. But what's the process of getting it back?
Yeah.
Argue, haggle on the phone, email, back and forth. Expensive for the company, pain in the ass for you.
Yeah.
With a blockchain, the second the plane's wheels don't leave on time, instantaneously paid. So you imagine this.
I can see how that could work with, say, like electricity. Turn your kettle on, get billed instantly.
Right.
Makes sense.
So you start, people get obsessed with Bitcoin.
Yeah.
And Bitcoin is an incredible product, and it's an incredible thing, and it's just an amazing asset. But it's so much more than that. It's the underlying technology that people really should be getting excited about, because that applies to business developments and business ecosystems that we can't even imagine. It really is going to completely modernize the way that we do business.
So in many ways then, would you say that Bitcoin's actually hindered blockchain and cryptocurrency and people's understanding of it because they've been blinded by the Bitcoin bubble?
It's a media thing, you know. So the media attention's been on Bitcoin because everyone goes, oh my goodness, it went from $1,000 to $20,000. It's done 14% in a year. And then obviously it comes down a lot the year after, and people go, oh, look at that, it's all bubbled. But Bitcoin in that year, if we take that short period of time where Bitcoin actually went crazy, Bitcoin was one of the worst performing coins.
Yeah.
By a long way, one of the worst performing coins. It was some of these smaller coins, these altcoins, that did gargantuan leaps because their market caps are smaller and the percentages are bigger.
That's where I made my money. It was in that kind of bull run. It was my friends. Which is strange because, so I've been into stocks and shares, investing, property and stuff like that for a few years, but my friends that have got no kind of interest in that world were telling me, you want to get in on this? You want to get in on this? And I kept saying, no, it's bullshit. No, it's bullshit. No, it's bullshit. No, it's bullshit. to the point where I relented and I just said, look, if I'm going to do it, I'm going to do it properly, but I'm going to stick to my tried and tested rules, which, like I said, was I only go for little wins. It's like, I don't think of putting in £100 and making 10 grand back, because to me that seems very unrealistic.
Yeah, and you should.
I would put 10 grand in and make a grand back or 2 grand back, because I find that's, in my mind, that's more sensible and it's more realistic. Yeah,
absolutely. And that's kind of where we are. You know, we'll talk about all the different ways you can make money shortly, but, you know, mining being one of those. But yeah, I mean, there's so much money to be made in the sector. So people, you know, think, for example, that, you know, last year when all the prices fell down from that high, people go, oh, you bought in Bitcoin, you lost loads of money, haha, you're an idiot, the bubbles popped.
But you still own the Bitcoin, don't you?
Well, this is the thing. One, you still own the Bitcoin, and two, this is again what people, you know, it really frustrates me when they look at it. So you go back to the Bitcoin price started going mad in about October, November 2017.
Yeah.
So a few months before that, Bitcoin was around about $1,000. By January, it was $20,000. It had gone mental. And then come, you know, to where we hit a low this year, it's about $3,300, somewhere around that mark. So within an 18-month period, it had gone from, or 2-year period at least, it had gone from $1,000 to $20,000, and then back to the bottom, which was $3,200. As we film this today, we're up to over $10,000. Yeah. So if you look at, a lot of people like to go, haha, the bubbles pop, look at you, you're an idiot, you lost all your money.
It's like it was 1,000, now it's 10,000.
Right, but here's the thing, look at the yearly lows.
Yeah.
Bitcoin's been around 10 years. Virtually every single year for 10 years, the lows have increased by multiples.
Yeah.
So yeah, you could go, oh, I bought $1,000 and I you know, got to 20 and I lost all my money because I could have sold it. Well, actually, 2 years in, you've got 300%.
Yeah.
What other asset class on planet Earth has done that?
Yeah.
And this is sometimes where you've got to take a slightly longer term approach with it. You know, we don't make any, you know, notion of this being a get rich quick thing. Yes, there are periods in there where you can make obscene profit.
People will get rich quick from it, because whenever there's, you know,
it's
media hype and stuff like that.
Yeah. But the beauty of it is, if you believe in this fundamental blockchain technology, Bitcoin is simply just a demonstrator.
Yeah.
It's the OG, the original. It will kind of be the forerunner of everything. And if Bitcoin moves up, as will the other coin prices. But fundamentally, it's all these other companies that are doing loads of cool stuff with this technology. And I still believe the kind of Googles and the Microsofts within this technology space are still to be found, or you know, still to kind of come to prominence. So if you believe in that fundamental space, the difference is now is if you put some money in 2017, it was a stab in the dark. You know, you didn't know what was happening. Now, 2 years later, we've got regulatory access coming from America. We've got custodial access. We've got tax laws. We've got regulations. We've got, you know, Facebook coin. We've got JP Morgan coin. We've got all the payment centers. The commercial entities have started to adopt this technology in very, very serious ways.
Isn't that kind of making it more mainstream, making it more like real currency? Isn't that the kind of opposite of what it was designed to do?
This is ironically the dichotomy. So effectively what Bitcoin demonstrated was this kind of screw the bank, screw the system, we'll do it ourselves. That was the kind of ethos. But ironically, within that technology that was created, there's just so many inherent advantages of that it's been adopted commercially for more mainstream things. So JP Morgan coin, for example, you can't buy it. Me and you can't go and get some of it. It's designed to settle international funds for various JP Morgan accounts. So it's an internal thing for them, but it fundamentally runs on a similar baseline technology.
The Facebook one's interesting then, because obviously they've got their fingers in all sorts of pies. I mean, you can watch a Netflix documentary about what they do with your data.
Yeah.
But the fact that they're going to do their own coin would suggest it's going to be around for the long haul.
Zuckerberg's a very smart fellow, and what he's effectively going to do is, if he plays his cards right, there's a very good chance overnight, down the line at least, he could genuinely become one of the world's biggest banks.
Suki! Om nom 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 nom.
Yeah.
And then he starts moving into financial products, and then how good's Facebook insurance going to be, because they know every goddamn detail about us.
Yeah.
And that's really the type of play that I think that organization is going to make down the line. So Libra is basically just effectively, they're saying it's a cryptocurrency. By definition, it's a little bit skew-whiff, and I won't bore you with all the technicals, but it effectively will be a digital dollar that will be accepted for Facebook ads. It'll be affected by their partners like Uber and so on and so forth. So you will be able to have a digital dollar that you can use to spend in all your favorite places online, which will be a really interesting thing moving forward. But it's certainly going to bring a lot of attention to proper cryptocurrencies as people get more comfortable with that ecosystem.
What's the difference between a bull run and is it a bear run?
Yeah, so a bear market. So basically, a bull run is just when the prices are moving northward very quickly, and a bear market is when we've had slumps. So technically speaking, the bull run was kind of October, November 2017 up to, the beginning of 2018, and then all of last year, all of 2018, the market fell and fell and fell, and we had a bear market for pretty much 12 months till this April, and then now things have picked up quite nicely.
So at the moment now we're starting another bull run,
so
would you say?
Yeah, it's looking that way. So since April this year, where Bitcoin kind of bottomed out around $3,000 or $4,000, we're now up to $10,000. So if anyone would have bought Bitcoin in April, now we film this, we're in August, you'd have made pretty much up to 300% on your money, because we're actually up to $13,000.
So when you said there about the bull and bear runs, do they run that off Bitcoin? Because you said it, and it makes me think of with stocks and shares. They say if America sneezes, the rest of the world catches a cold. Is that the same with Bitcoin?
Exactly,
is Bitcoin America?
Thing. Yeah. So Bitcoin is the best way to think of Bitcoin is it's a bit like the oil market in US dollars.
Yeah.
Like everything is traded in US dollars. Everything in the crypto market is traded in Bitcoin. So if Bitcoin moves up a lot, so Bitcoin goes up 10%, typically the smaller coins will move up by a larger percentage. Just because there's less money in those coins, it takes less money to move them, but they generally follow each other. So,
I noticed the link with when it was Ether, it was if the Bitcoin price went up, the Ether price went up. It was almost like they were
joined. So Bitcoin is, so everything in the crypto world, so any of these crypto tokens, these 2,000 crypto tokens, they're all interchangeable. They're all interchangeable with Bitcoin. So you can take 100 Raven coin and turn it into this much Bitcoin, or vice versa with any of these coins. So Bitcoin is the lead in all of that. So if Bitcoin goes up, the rest generally do. If Bitcoin goes down, the rest usually do by a bigger percent. The only thing to point out there is that there's a lag time.
Yeah.
So for now, for example, Bitcoin's gone up to about $10,000 as it sits today. The other coins haven't really moved up that much since when they were about $4,000, $5,000, $6,000 to Bitcoin, because it's moved up so quickly. People are still a bit nervous as to, is that the new price level, or is it going to go up a bit, down a bit? So there's always a bit of a lag, but generally speaking, they've followed the others historically for many years now.